Welcome to this explainer. We're diving right in to unpack exactly how Jack Dorsey built a massive, interconnected financial empire designed to completely reshape global commerce. For years, traditional banks were totally looking the other way. They essentially dismissed Square's tiny white plastic card reader as a fun little toy for local farmers markets. But by the time the banks finally realized what was happening, Block had quietly built an entire alternative ecosystem specifically designed to bypass them entirely. So today we are taking a deep dive into Block, which you might remember as Square, to understand exactly how they evolved from that one simple card reader into an absolute multi-billion-dollar machine. Here's our quick roadmap for today. We're going to cover the Square's origin story, how they built the Cash App, exactly how Block makes its money, their strategy of merging ecosystems with Afterpay, and finally, their massive bet on Bitcoin. All right, let's kick things off with Section 1, the Square origin story. Imagine losing a $2,000 sale just because you couldn't swipe a piece of plastic. Well, that's exactly what happened to glass artist Jim McKelvey back in 2009. And honestly, this wasn't just his isolated problem. It exposed a glaring, massive flaw in the global financial system. Back then, simply getting a merchant account to accept credit cards was an absolute nightmare for a small business. You had to endure hard credit checks, navigate piles and piles of paperwork, commit to all these hidden fees, and then wait weeks just to get approved for a clunky, incredibly expensive terminal. Jack Dorsey, who was fresh off his stint as Twitter's CEO, saw all this friction and envisioned a completely different world, one where independent entrepreneurs could instantly compete on a level playing field with massive megacorporations. Jack Dorsey's core philosophy is all about simplifying complexity, and that mindset is exactly what led to Square's revolutionary flat 2.75% fee and that iconic little white card reader. Think back to when this launched. Taking a tiny piece of plastic, plugging it right into a smartphone's headphone jack, and instantly processing a payment, it literally felt like magic. There were absolutely no hidden costs, no long-term contracts, and an instant setup process that took minutes instead of weeks. It was a radical departure from the opaque, heavily gate-kept status quo of the banking world. They were completely democratizing access to the economy for millions of micro-merchants. So, tracking their evolution, you can see how rapidly they compounded their success just by solving very specific micro problems. Square started with that first real-world transaction at a San Francisco coffee shop in 2009. By continuously building exactly what small businesses actually needed, things like inventory management and payroll, they scaled incredibly fast and went public by 2015. But they obviously didn't stop at merchants. They launched Cash App to tackle consumer finance and eventually absorbed Afterpay in a staggering $29 billion acquisition in 2021. In just over a decade, they turned a localized hardware solution into a global financial footprint that reached historic milestones by 2025. Moving right along to Section 2, building the Cash App. Okay, so once Square solved the payment problem for the sellers, they realized they desperately needed to empower the consumers standing on the other side of the counter. Cash App fundamentally set itself apart from the intimidating traditional banking system by completely bypassing legacy settlement times. For decades, the standard ACH bank transfer took 2 to 3 business days to clear. Plus, traditional banks heavily penalized their poorest users with devastating overdraft fees. Cash App came in and made moving money instant and free. You literally just needed a smartphone to transfer funds to a friend immediately. They built a frictionless, instant alternative to the legacy financial system. But here's the absolute genius part. It was how Cash App marketed itself. Instead of acting like a stiff, untrustworthy corporate bank, they leaned directly into the cultural lexicon. They essentially created this massive organic social movement around Cash App Friday giveaways. It became so embedded in modern culture that it was constantly highlighted in mainstream hip-hop lyrics. Even the users themselves organically changed the name from Square Cash to Cash App. And why does this matter so much? Because while a traditional bank spends hundreds and hundreds of dollars to acquire a single checking account customer, Cash App's viral lifestyle brand drove their customer acquisition costs down to an incredibly low $10. Now, if you take one thing away from this explainer, it should be this concept right here, an ecosystem of ecosystems. This is the absolute key to understanding Block. They aren't just building standalone apps, they are engineering closed loops where money constantly circulates without ever touching an outside bank. Think about how this flows for a second. You get your paycheck direct deposited into Cash App. You instantly buy a fractional stock, sell it a week later, and use those exact dollars seconds later to buy a coffee at a local merchant using a Square point-of-sale system. Block facilitates every single step of that journey, taking a tiny cut along the way. The traditional boundaries simply fade away, and the capital stays entirely within their proprietary network. Let's dig into the math in Section 3, how Block makes money.
Grounding our analysis in their Q2 2025 investor presentation, we get actual, verifiable proof that this ecosystem strategy scales into a highly profitable, highly sustainable business model. Block operates under a very strict financial framework that prioritizes consistent, massive growth, but absolutely refuses to sacrifice core profitability. We are talking about $10.17 billion in gross profit in 2025. That is a massive number, and it proves that their closed-loop ecosystem model isn't just some theoretical tech pitch to venture capitalists. It's a highly profitable reality. The underlying engine driving this is what they call gross profit retention. Basically, they aren't just acquiring new users and letting them sit there dormant. They are successfully upselling the users they already have. Every new product they introduce actively multiplies the lifetime value and the revenue potential of their existing customer base. So how do they get there? They use this exact equation called the Inflows Framework. First, they grow the number of active accounts virally. Second, they focus heavily on the volume of dollar inflows per active. Dollar inflows is a really critical metric. It's the actual amount of outside money a user deposits into the Block ecosystem. They increase this by offering really powerful features like direct deposit and consumer lending. And finally, the third step is the gross profit monetization rate. This is where they take a small fee from all those inflows through interchange rates, business transactions, and cross-selling premium services. Just wrap your head around these 2025 metrics for a second. $218 billion in peer-to-peer volume, $183 billion in commerce volume. These staggering numbers perfectly demonstrate the sheer velocity of money flowing into their system. When a customer adopts just one major financial service, like routing their direct deposit to Cash App or using the Cash App card for their daily spending, Block sees their dollar inflows multiply dramatically compared to a basic user who only sends occasional peer-to-peer payments. It creates this beautiful, self-reinforcing flywheel of continuous engagement and compounding profit.
Which brings us to Section 4, merging ecosystems with Afterpay.
By acquiring Afterpay, Block essentially zipped their consumer and seller networks together like a jacket, creating one totally seamless experience. They allowed consumers to manage interest-free installments right inside the Cash App interface they already know and trust. Simultaneously, they gave Square sellers an instant, massive boost to their conversion rates. This acquisition brought omnichannel commerce tools directly to independent sellers, attracting entirely new demographics of shoppers and driving incremental revenue from literally day one. And they did it all while offering consumers fair, transparent credit alternatives to traditional high-interest credit cards. But Afterpay isn't just a credit feature. It is literally Block's primary engine for driving massive, frictionless global expansion outside the United States. By leveraging Afterpay's tremendous existing traction in markets like Australia and the UK, alongside their 13 million active US consumers, Block is actively working to create one cohesive, interoperable global network. Interoperable just means the backend talks to itself flawlessly across different countries. Ultimately, this creates a unified, borderless shopping network where customers experience zero friction, zero currency hurdles, and zero borders when they discover products and move money globally.
And finally, Section 5, betting big on Bitcoin.
To Block, Bitcoin is way more than just a digital asset you buy and hold, hoping the price goes up. They view it as the ultimate global financial infrastructure. This is exactly why Cash App alone generated $10 billion in Bitcoin-sourced revenue. And it's really crucial to understand how they make that money. Block isn't just hoarding Bitcoin on their balance sheet. They generate massive revenue on the microscopic spread and fees charged when everyday people buy, sell, and transfer it. They truly believe Bitcoin will redefine money, so they built a frictionless on-ramp, allowing users to auto-convert paychecks or even earn Bitcoin rewards just by swiping a standard debit card. They're basically building the entire infrastructure from scratch to make Bitcoin a true medium of exchange in daily life. For merchants, Square Point of Sale offers full-stack corporate Bitcoin banking. For consumers, they've launched the BitKey multi-signature hardware wallet for true decentralized self-custody. And crucially, they integrated the Lightning Network directly into Cash App, boasting a 9.7% return on that integration. The Lightning Network is a layer built on top of Bitcoin that enables nearly instant, virtually free microtransactions. This solves Bitcoin's traditional speed issues. It actually allows you to buy a cup of coffee with crypto without awkwardly waiting 10 minutes at the register for the transaction to clear. This quote right here completely captures Jack Dorsey's ultimate vision, bypassing traditional financial gatekeepers entirely. This is exactly why a publicly traded company like Block heavily funds Spiral, their open-source developer initiative. Why fund independent developers?
Because by building and strengthening Bitcoin's base layer, Block ensures they won't have to rely on the legacy rails of Visa or MasterCard in the future. They are actively securing a truly fair, open economy that absolutely no single corporate entity can shut down.
So, as we wrap up this explainer, here's the massive question we all have to ask ourselves. With this relentless push towards simplicity, closed-loop ecosystems, and Bitcoin, is the traditional bank branch destined to become completely obsolete? By brilliantly combining physical point-of-sale hardware for merchants, a viral peer-to-peer consumer app, a global credit engine, and a decentralized cryptocurrency infrastructure, Block isn't just participating in the legacy financial system anymore. They are actively building its replacement. Thanks so much for joining me on this deep dive, and as always, keep questioning how the money in your pocket is evolving.